Should be up on YouTube and up in the virtual trading floor. Hey, hey, hey. All right, let's get started. Today is Monday, April 17th, 2023. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member if and reciprocal of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I exited Roku and Shop today that were on there. I'd gotten out of Schwab on Friday. Ooh, it says JP Morgan on there. That shouldn't say that. Let me do a quick fixeroo. Whoops. Don't have that position anymore either. Cool. All right, let's go over to the charts. SPYs closed up 0.4% for the day. The S&P, the Nasdaq was pretty much flat, and the IWM was a big leader here, up 1.4%. So some solid mean reversion once again. Russell continuing to play a little bit of catch up, albeit in fits and starts. But today, solid outperformance from the Russell, up 1.4%, with the Qs, which have been our leaders since the SVB blow up, only flat. So the market giving exactly what we're looking for, exactly what we've been calling for. Though, like I said, it's kind of been in fits and starts. I'm sure that this earnings season is going to have a big impact on that as well. But so far, so good. And you can see the intraday today was actually really boring for the most part, especially if you're looking at the SPYs. SPYs had nothing going on almost all day, but this market had a big afternoon rally when the IWM cleared 178, which has been a key level that we've been discussing. And it just goes to show you the importance of daily chart levels. It goes to show you the importance of understanding the market on multiple time frames and of paying attention to more than one index, not just paying attention to the S&P, not just paying attention to the Nasdaq. You know, really looking at more than one index, the S&P, the Nasdaq, and the IWM in conjunction with one another. And we got pretty much exactly what we were looking for. You know, what we discussed in the morning meeting today is that the S&P looks great, but it's coming into really big range resistance, like 415 to 420. We had this one uptick in August where we got as high as 430. But for the most part, it's really been this broad range. I could probably even start a little below 415, 410 to 420, with the exception of that one peak last August. That's been range resistance that has gone back now for over a year. And the big difference on this test of range resistance versus previous tests is that our big picture has gone from lower highs and lower lows to higher highs and higher lows. We've gone from a declining 200-day to a rising 200-day. So that means that, you know, the slope of that 200-day is always very important to me. It shows you the essence of trend for a very large time frame. This 200-day sloping higher is now also confirming what we've been discussing, which is this pattern of bigger picture higher highs and higher lows that have come into the S&P ever since the October bottom. Do I dare say bottom? Bottom for now. Obviously, there's still an opportunity for this market to break October lows before it makes new all-time highs. But at least for now, that October low is our bottom. We've got that low followed by a high in the beginning of December, higher low that came in at the end of December, higher high at the beginning of February, a slightly higher low in March, and now we're waiting to see if we can really break out of this resistance range. That previous peak from February is 418, and we'll see if we can really get some upside continuation from this market or not. And again, we want to keep in mind that earnings season's coming up. So obviously it's going to have a big effect on things. There's a lot of chatter about this earnings season. It seems like expectations are going to be relatively low, but maybe not as low as that last earnings season. If you guys remember when we were coming into the last earnings season, one of the big things that we were chatting about was expectations for the last earnings season were just so extraordinarily low. It was very similar to what we saw actually back in July 2022. That earnings season was the exact same thing, where when we saw companies that just reported in line, let alone if they beat, there were really, really big upside moves on that. This earnings report, as we're coming into it, doesn't feel quite as negative to me as that last one, but it certainly doesn't feel bullish either. So it'll be interesting to see as we start seeing these first companies report. Obviously, we already had a couple on Friday with JP Morgan, but JP Morgan is in a class of its own with that blowout earnings report. We'll begin to see, like, it'll be really interesting to see when we get some kind of borderline earnings reports that come out, where it's like, ooh, is this good? Is this bad? It's hard to tell. You know, you're not certain. It's kind of in line with expectations. It'll be really interesting to see generally how the market's reacting to those types of reports as we come into the beginning of this earnings season. But the S&P looks fantastic. The NASDAQ looks fantastic. Same situation. Higher highs and higher lows. 200 days started to curl up. You've had this big, tight consolidation that has lasted for the entire month of April. We need to pay attention to if QQQ 320 can break. Might need some support from Netflix later this week, Tesla later this week, and then Apple, Microsoft, Amazon, Google, I think all reporting within a couple of days next week. So might need a little bit of support there to really get the Qs above 320. QQQ gave a very tight, inside, boring trading session today. All this is further time correction of the move. Right? We had this big move that started with the SVB blow up, where we discussed here that Monday morning that the Qs could run off that Apple could become a safety play, as an example, with the amount of cash that they're holding. That's exactly what happened. We had beautiful QQQ leadership. I think I saw a statistic. I mentioned it into the chat earlier today when I was chatting with Cody. I saw a statistic over the weekend that if you took out the performance of Apple and Microsoft last quarter, that the S&P would actually be negative. And obviously Apple, Microsoft is such a big portion of the Qs. So, Apple became a safety play in March, caught that bid. Qs now have been going sideways, and this is exactly what I want from a bullish perspective. I actually want the Qs to go sideways, because what we need, and we still don't fully have, is this IWM participation. Last few days of last week were real tricky. The Wednesday sell-off on the CPI/FOMC, the Thursday bid back up on the PPI that came in super light, and then Friday we had the retail sales number and IWM underperformance. IWM was actually relatively weak, lost 178 again, which is what I don't want to see. But I guess technically it's an inside day for the IWM on low volume, but we closed on highs. We closed above 178. This actually, as I'm eyeballing it, this looks like the highest close. Maybe the highest close? I'm just eyeballing it. Yep, looks like the highest close for the Russell since the SVB blow up. So this area here, this like 178's been key, and I think we really begin to get confirmation above 180. Above 180, this index, which has been much more neutral, arguably bearish from a technical perspective, even though we've been kind of bullish on the bounce back trade here, and we've actually caught it really well. You get above 180 and this Russell starts looking really conducive, and then I think that can happen in such a way where it actually supports the SPYs and Qs to potentially try to break out. The SPYs potentially to break out of that really big range that we've discussed, and the Qs to give continuation off of this bull flag. Though, once again, earnings season, when we get the big companies reporting really next week primarily, everything's off the table. So we'll see how that plays out. As far as today's trading session goes, again, relatively boring. We have an inside day kind of across the board, though I'm pleased with the IWM recapturing 178 that led to this kind of afternoon rally. But despite the fact that the market was boring, we had some really good calls from the morning meeting on things that we were looking at. The biggest focus of which for me was XBI via Labu. Is how I've kind of been trading it. Obviously, you want to be careful with that Labu because of the decay it has by being a 3x leveraged ETF. But we looked for kind of this 1, 2, 3 type of play to come out in XBI. That big positive Maribozu on Thursday with great volume, a little bit of a rest day on Friday on lower volume, and then continuation of an inside and up pattern here. And that is in conjunction with the break of this downtrend that I had been talking about in the beginning of April. It was not an easy trade to get this thing going, though. in the beginning of April when this thing was breaking this descending channel, it wasn't really I was looking for this move initially to actually happen in more early April. Instead, it based out. The market, I feel like, was not supportive on some of these days, especially the toughest day was Thursday of last week when we gapped up on CPI and this thing looked like it really wanted to run, and then it failed. Then just for it to actually finally go on the PPI and finally do what I've been looking for with that kind of break of this base after the break of this descending channel. Beautiful continuation though today, and this was kind of a big focus. It's by far my biggest winner. So that XBI was a solid one that we're kind of paying attention to this morning. You had a little tougher to get stock in, like this OLLI trading above 60 we're looking at. This ENPH gave great follow through. I think the execution, I wasn't looking at it off the open. You really had to grab this ENPH in that 215 area, like right at the open as a momentum trade to be able to get stock. So the execution on that one was certainly not very easy. And some other stuff that just didn't really do too much. This Uber ended up giving good follow through, a little bit tricky off the open. I know a few guys were focused on this thing on that initial pullback, but then the 80 EMA caught up, gave you your entry. I greatly do prefer finding the execution setup in non-extended stocks. So I'm not going to say that this Uber was easy. It definitely wasn't easy, and it even ended up breaking that low before kind of closing on highs. But in some ways, I feel like the pullback into the 80 EMA, then if you're able to get a trade setup, is actually an easier trade than trying to buy like an ENPH, especially a stock that's as expensive as ENPH, like right off the open and kind of looking for that momentum there. But I ended up kind of not really being involved in those to the same degree. There's some great relative strength in like a Shopify that I traded kind of off the open, but liquidated my position pretty quickly. Roku traded really well. I was swinging Roku over the weekend. I added to Roku this morning and liquidated that position into the close. It was a pretty solid one. Roblox was kind of just a range day trade for me that started pre-market. I bought some stock under 40 pre-market. I was able to work like the 40 to 40.50 range like 6 or 7 times on this thing today as it kind of just went sideways. Didn't really like how it closed. It's extended to the downside on the daily, even though 40 is kind of some support. So I just liquidated that position in the close. I'll potentially revisit it tomorrow. I took a trade in this AI today that I was able to make a few bucks in that at one point I thought was going to fail. This always goes back to one of the things that I love to discuss, and it's a question that I get a lot about, buy the ticket, take the ride. When you put the risk on a trade, when you have a game plan set out, just let the trade play out. We saw like a BBAI running really early, which I don't know anything about this company. It's got AI in the symbol, so that's all you've needed recently to really kind of get things going. But this was running really early. And then I was looking at this AI, which is potentially the more real company. Like they've got real earnings, I think, if I remember correctly from the last earnings report that they had that was like really pretty decent. So you had this good kind of initial opening move. You had these 2 inside fives in a row. And I'm like, okay, if this thing can really clear these inside fives, if it can clear $22, maybe it starts to play some catch up on BBAI. Maybe this is one of those days where they start kind of running those momentum names. So I bought some of this AI, not too heavy, using the low of the first inside five as my stop loss. So the low of that bar is 21.83. So therefore I would use 21.82 as the stop loss. You have this 2 inside fives. It eventually breaks up. It's looking pretty good. High here is 22.24. I'm like, okay, let's go. And then this candle just closed deplorably bad on volume. So I thought for sure my trade was going to fail at that point. I felt pretty confident that my trade was going to fail at that point. You got this shooting star kind of coming in, a failed breakout on the intraday, and you've got volume on that failed breakout, so potentially people are trapped. There's a lot of reasons to think that trade would fail. There's a lot of reasons to say, all right, I'm just going to liquidate my position because it looks like this trade might fail. That's just not how I trade. And it's kind of what I always preach. It's just too easy to always find the reason why any trade that you're in should fail, and that will tend to have you liquidate positions too early. So even though this thing didn't look good, I already assumed the risk of the trade. I had my stop loss in at the spot I wanted my stop loss. I got, 20 cents of risk, something like that. And then lo and behold, this ADMA kind of catches up, it holds in, and then it breaks up a little bit. and then turns into kind of a sloppy uptrend throughout the day. And this is another one. I ended up liquidating my position kind of into the end of the day here. I just didn't really want to take the overnight risk, though I think it looks actually okay on the daily chart. So I got out kind of into 23 bucks. I'll take a look at it again tomorrow. But just a great example of buy the ticket, take the ride, thought for sure my trade was shot, and then, you know, worked. So I'll take it. I'll take it. And I think that pretty much covers everything I've got for you guys on my end for today. So I am happy to take a look at any questions, any ideas, any names, anything that you guys want to take a look at. First thing I'm seeing here is from Anthony. So Anthony had asked me a question, I think after the close on Friday or during the day on Friday, and I asked you just to bring it up during the afternoon meeting one day this week so we could take a review at it. So Anthony's saying, please remember to talk about resistance and support areas and how we determine the short time frame versus the long time frame levels in context of a trade setup. Okay, sure. So kind of a two-part question. So start by talking about support and resistance. So support and resistance actually are oftentimes levels. Areas. They're oftentimes areas. And I say an area as opposed to like a specific penny. You always want, like, if you're doing a Google search on like what support and resistance is, they always say, what's up, Ashani? They always say like resistance is like the line where the stock can't get above, right? And support is like the line where the stock can't get below. Like it's this perfect line, this perfect price. $50 is, you know, the resistance like spot. $25 is the support spot. And you know, I'm guilty of that myself in my like intro to technical analysis class that I have. You know, to keep things simple, at least conceptually, I always like to start with it being a simple penny. Though I really don't like when people say that, you know, support or resistance is a line that stock can't get above, or a line that stock you know, can't get below, because I say it all the time. You know, if you think trading is as easy as just memorizing chart patterns, you got a rude awakening coming for you. It's not about chart patterns. It's about understanding the supply and demand dynamics that actually make up those chart patterns, and then understanding all of the layers of probability that will affect whether or not that chart pattern can actually work. I've seen statistics that show that depending on the chart pattern that you look at, they've got anywhere from like a 30 to 50% failure rate. Well, if you're looking at chart patterns that have a 50% failure rate, how the heck can you make money on that? Well, you make money on that by recognizing, you know, the other layers of probability and the fact that not every bull flag is created equal. You want to understand the supply and demand dynamics to actually make up it. So I really don't like when people describe resistance as a line that the stock can't get above. What is resistance? Resistance is an area for the stock where there tends to be an area or a price for a stock or a market where there tends to be more sellers than buyers, and more supply than demand. For whatever reason, it's too expensive. So as the stock approaches that area, less people are inclined to buy it, and more people are inclined to sell it and book profit, right? And then eventually breakouts can occur if that supply gets deteriorated because there's enough demand coming in at that higher price for whatever reason. There's a whole ton of reasons why that could be, or eventually you can take out all that supply and then you can get continuation on the stock, right? So that's like what resistance actually is. But resistance is rarely, not never, but it's rarely like $50 to the penny. Usually it's an area. It's the area between 49.70 and 50 quarter. And you're looking at your daily chart and you see like a whole bunch of tails or spots where it stopped, like more or less at that price. Actually, I remember that OLLI from this morning, that this is like about as good as you can get of resistance being a specific penny. Like if you look at this chart going back to, you know, beginning of February, the high here is 59.90, the high here is 59.94, the high here is 60.13. I mean, I guess you could argue that even this is a little bit of a range. 59.83, 59.99, 60.15, you know, 59.99.9. You know, this is about as good as it gets as of resistance being like a very specific penny. And the one time they gapped it above, they wrecked it all. Like the sellers came in immediately and just jammed that thing, back down below 60. But it's much more often, when you're looking at these daily charts, like if you go back to this really big range that I was just talking about, you take a range for the S&P 500 represented by the SPY ETF, and you try to find something that's clean and clear as that OLLI $60. Very, very hard. And an OLLI $60 resistance level can sometimes be that perfect because there is like a very specific institutional seller that is just on the offer at $60, and it's an individual stock, and maybe the float is small enough or whatever it is, that seller is just big enough and is just sitting at 60 that seller can create that specific $60 resistance. If you're talking about like at the index level, I don't think that there's anyone in the world big enough. Take the biggest fund manager in the world. I don't think there's anyone in the world big enough to really truly create daily chart resistance by selling at one specific penny for an extended period of time. It's just the market's just much too big for that. But there will still be areas where all of a sudden those buyers are running out of steam because they think the market's too expensive, or areas where sellers are heavily incentivized to sell and book profit for whatever that reason. And like I was just kind of talking about when we were doing the bulk of our meeting, this area is really like, I was calling it 415 to 420, but then as I was looking at it during the meeting, I was like, well, if you count in these peaks from December also, it's really like a whole area between 410 and 420. And that even excludes the fact that you had this one real big rally last summer where the SPY got all the way up to 430. But for the most part, from a trading perspective, we want to be able to narrow down these resistance areas to specific prices as much as we possibly can because it makes the trading easier. And then you look at how the market, it goes back to what I'm always talking about. You can't just memorize what chart patterns look like. We got to look at all these other layers of probability. So that's why I keep referencing when I'm looking at this resistance range, right? How do I know if the resistance range, now that we're testing it, let's just assume, one test here back in May, June, a second test that's actually a failed breakout of that test in August, with some like little tests, as with the lower highs kind of on the way down there. A third major test back here in December, a fourth major test in February, and this is kind of our fifth major test here in April. How do I know that the SPY is going to break out? First, I don't. I have no idea if the SPY is going to break out. I don't have a crystal ball. We leave the crystal ball fortune telling to Josh Leffler. I don't have a crystal ball. I can't tell the future. I have no idea what's going to happen. I have no idea if the market's going to break out to all-time highs. I have no idea if the market's going to make new lows in October. And not to go on a tangent, but I actually think that one of the best, most humbling things that any trader should do and should do regularly is actually say, I have no idea. And say that you don't know, because no one ever knows. There are no 100%. All we can do is look at this fifth test of this major resistance area, which again just represents all of these 5 major tests on previously, because all we can do is look back. Previously, this has been the consistent area where all of a sudden supply outweighs demand, the market fails and the market ends up coming down. So what makes me think on test number 5 of resistance here that we could break out? Again, first of all, I have no idea. All I can do is assess the pieces of probability that can create a higher or lower probability circumstance of a breakout happening or not. And that, again, is why I've been referencing this big picture higher low, higher high pattern that's actually started to come into the market since the October low. Because that's a massive layer of probability that we did not have back here in December. Back in December, we were still in a big picture pattern of lower highs and lower lows from the January 2022 peak, right? So if anything, there was probably a higher probability of failure there. Well, there is a higher probability of failure there than there is failure now. You were coming into a declining 200-day, in a pattern, big picture pattern of lower highs and lower lows. Now I'm coming into that same area, but buyers have stepped up, right? We always want to go back to our trading fundamentals. What are pivot points? What is a trend? A trend is a pattern of higher highs and higher lows, right? An uptrend. A downtrend is a pattern of lower highs and lower lows. But what does that mean, right? Higher highs and higher lows. One of my favorite questions to ask beginner traders is, like, I could, draw an uptrend on a board, simply, just like higher highs and higher lows with a line. And I go, who's in control, buyers or sellers? And pretty much everyone raises their hand, buyers, right? Obviously. And it's like my favorite little trick question with new traders, because no, it's not buyers. Yeah, fine. Within the totality of a trend, buyers are the ones in control, or the uptrend wouldn't be coming in. But the reason why it's a trick question is because within an uptrend, sellers are in control at various points. Every time there's a peak and the market pulls back, that period of pullback is a period in which sellers are in control. What makes an uptrend is the fact that buyers regain control from consistently higher prices over time. It means that demand is rising over time. And that's what we have different on this test of resistance that we didn't have previous times, is we've got the fact that buyers stepped in at higher prices in December to create that higher low versus October, and then stepped in at higher prices again in March in the face of a banking crisis to once again create another higher low. So we're now seeing that, yeah, you still got this overhead supply that's represented by this resistance area, which again is a space, not a specific penny, because we're looking at an index here. But we've got also now buyers actually consistently stepping up in price. So therefore, while there is no guarantee of a breakout, based on that piece of information, there's a higher probability of a breakout of the market really being able to get above 415, 420 than there was back in December. So that's kind of the difference between a support or resistance area, which is what they typically are, versus a support or resistance price, which is what it is kind of less often, where it's like a perfect line, like that OLLI. Obviously, we prefer the perfect line, and again, even when I'm dealing with areas, and you can see it, when you look at kind of the list that I post to the alert section every day, I do my best to break it down to a specific price. Though a lot of times I'll say, like, long versus the $50 area. I'm still saying like $50. Like, I'm trying to define it down to that specific price as much as I possibly can. But at the same time, recognizing that it's an area, it can be a little bit loose. It's a zone to pay attention to, and then you can go into your smaller time frames for that confirmation. It goes back to what I always talk about. The big picture tells you what direction you want to be involved in with the market, how you want to be generally broadly trading. The small picture tells you your 5-minute charts, your 15-minute charts. They tell you how to actually do it. So I appreciate the question. And then the second part of your question was, how do we determine the short time frame versus longer time frame levels in the context of a trade setup? So I can tell you that even as like a day trader, I only care really about daily chart levels. I really don't care about a 5 or a 15-minute resistance level that was created during the day. If you're looking at, maybe not Apple, but if you're looking at, certain stocks that maybe are a little bit lower float or a little bit, smaller market cap, that intraday resistance that you could be looking at, that I have enough buying power to create resistance for certain small time stocks if I want to, on small time frames. And you don't want to be trading off of me. I'm not going to be able to give you an edge. I'm not big enough. You want to be able to trade off of the institutional money. Institutional money forms itself in daily chart levels. The daily chart levels are what I want to pay attention to for my trade setups. So, and then again, the small time frame is about execution, but what are the small time frame execution setups that I'm trying to take? Well, I'm taking daily chart breakouts, right? That's like the first class I teach in my training program. I'm taking daily chart breakouts, but using a 5 or a 15-minute chart stop loss as the ignition bar, for that breakout. Or I know the context of this daily chart. I know where the context is insofar as the stock is trading above or below or into that resistance level, and I'm looking at that in conjunction with an inside 5 and up on good confirmation volume with relative strength on the small time frame to actually be able to execute, right? I just said a lot of information in almost one sentence. The actual trade execution setup is the inside 5 and up. Everything else I said is really important information. What the daily chart's doing, that's how I know I even care about that inside 5 and up, the relative strength, the market being on my side, all that other stuff. So you got to put that kind of all together. So yeah, you show me a 5-minute, resistance level. I usually don't care too much about it. I probably am not going to trade it unless it's really in conjunction with other things. I want to be trading the daily charts. The daily chart, I think, is the most important time frame. Yeah, I'll just leave it at that. And before I get to Kyle's question, it looked like DJ had a follow-up to Anthony's questions. Sometimes it's tough to differentiate between a support or resistance range and just two different levels. If the SPY has a support range of 50 cents, you can obviously can just consider that one level. But what if it's a range of $2, or what I just said, a range of $5 to $10? Could you then play that as two different levels, perhaps on an intraday time frame, or do you prefer to be completely hands-off? So what I prefer to do, kind of what I was describing, is I try to narrow it down. I try to narrow it down to a specific level at a time frame in which I want to pay attention to it based on the other layers of probability. So, and you can also do that, like if you're looking at SPY, let's use your example, you can do that in conjunction with the other indices as well as an important piece of information to pay attention to. Like if I know SPY, maybe SPY 415 is the trigger. Maybe SPY 420 is the trigger. Right now, as I'm doing this afternoon meeting, I can't tell you. But I can tell you that right now I just got an inside day in the SPYs with a high of 414.29. And that if I can get an inside and up in the SPYs, it's probably going to be going after 415. And if I can get volume confirmation, and at the same time I've got the Qs breaking 320, which is a much more clear straight line level right now actually. I got the Qs kind of breaking 320, and I got the IWM like trying to go after 180. Then all of a sudden I'm able to narrow down my SPY 415 to 420 range to 415 for execution. Or if I'm able to recognize, oh wow, big volume is really coming in as we're going after this 415 and it's 9:40 in the morning, again I can kind of narrow it down. So you do your best. The round numbers can kind of be important a little bit to pay attention to just from a psychological perspective. So I think you do your best when you're looking at support resistance like zones or ranges to narrow it down to that price, and then utilize your other layers of probability to actually say, hey, you know what, this is actually the day and time for the execution. Which, I mean, that even goes back to, I was kind of speaking to somebody a little bit on the phone about it today. If you look at like the list that I post every day, that's like a watch list for me. If I got 10 stocks in that watch list, and that watch list will be anywhere from 3 to 15 names usually, right? It's extremely rare that I trade every name on the list. It's a watch list. This stock at this price or this area, like ENPH is the first one from today, 215 to 216 area was the breakout zone that I'm kind of paying attention to. It does not mean that I'm necessarily trading it. I want to see everything come together properly for me to make that execution. I would rather, for the most part, not be involved in a trade that works than kind of be involved in a trade if I feel like I don't have enough pieces of information, layers of probability on the side of my trade. So I might just end up in any typical day just taking a couple of the things that are on my list, or even none of the things that were actually on my list, which is fine. It's specifically a watch list. It's not a mandatory must trade guaranteed to work list. That's not going to be something that ever exists for me. So yeah, like ENPH, which I ended up not trading, but if you were watching this thing off the open, Well, you know, this 215 to 216, that's the zone based on the daily chart. So I got a breakout, I got volume confirmation. Look at that volume in the beginning of the day. I got the fact that it got upgraded, that's a layer of probability. The fact that it's the beginning of the day, it's a layer of probability. So if I was, you know, watching EMPH closely off the open, which I wasn't, and if the spread I deemed appropriate, therefore the risk reward's appropriate, then maybe, you know, I'm executing this thing through 216. What's the low here? 214.78. Maybe I'm super on point and maybe getting stock through 215, but it would be somewhere in that 215 to 216 area. I can tell you for sure, if I wasn't in by like 216 quarter, I wouldn't be chasing any higher than that, and I would let the thing run without me. So this inside 5 and up for momentum here with the volume confirmation was pretty decent. Though, with that said, the 5-minute extension always makes me a little bit nervous. So I hope that helps. Anthony / DJ. From Kyle here on Netflix. I tried Netflix. Ooh, Netflix really weak today. Yeah, Netflix kind of particularly weak today. How did this close? Down 1.7%. I don't know if that's just selling into ahead of the report or if there was news I missed. I tried Netflix today at 11:30 a.m. 5-minute hammer for a trade back through 3:30. Okay. Okay. Never actually got above 3:30. Technically cheated. I was looking for the hammer signal in this area. I was thinking it was approaching 3:30 daily support. Okay. Yep, 3:30 seems decently important on the daily. I like the thought process. 15 and 30 minute looked really extended. 5-minute did not look too extended, but it's also 11:30. So I like all the thought process. But I still took the trade with real small dollar risk. Can you please give thoughts on this counter trend long? Yeah, no, I like the thought process. You're dealing with a stock that's relatively weak, you know, but sometimes you don't get the opportunity for a counter trend extension trade if you don't have relative weakness. 5-minute chart, okay. You at this time of day, you need to be looking at the 5-minute chart in conjunction with a 15 or even a 30. So you're looking at your 15, and yeah, that 15 is getting really extended here. Really, really extended. So you're looking for your 5-minute for confirmation. I wish there's a little better volume on this candle to confirm the candle. But yeah, I mean, I like it in conjunction with the 15, in conjunction with the daily chart. I don't love the time of day. I don't love the relative weakness. But I like the thought process that's behind the trade. I don't love that it just gave a 5-minute bear flag continuation of a time correction, but again, it's a 5-minute chart at 11:30, you know, so you really need to be paying attention to that 15. That 15 is super extended like you just described. So I think it's a fine trade. You know, you don't really necessarily have the market on your side with the Q relative weakness that's out there, but I would argue that you don't really have the market against you either. And the Qs look at that, are trying to give like a 5-minute hammer at the same time. So yeah, I support the trade. Don't know if you cheated enough to be able to get your risk covered. I'm assuming that you didn't and you just got stopped out. But I also like that you took it. You know, look, midday trading, if you're doing midday trading at all, if there's no real news event that's happening that's moving markets, it should kind of always be done with low dollar risk. I've mentioned in the past, and I haven't looked at the stats recently, but you know, I have seen stats that show that, you know, between like 11 and 2 as a team, that's when the team P&L is by far the worst as far as new trades that are ongoing. Which doesn't mean don't put trades on between 11 and 2. It just means that you should be selective about it. You shouldn't be doing a ton of dollar risk, or there's an actual event that's occurring, there's some sort of news event that's occurring, or the market's massively in play, in which case you can be more active that midday. But everything that you're telling me, I think, is all A-okay, so good stuff. From Zachary, some of this might sound trading 101, but that's fine, but I'm trying to think from scratch without bias and get a new perspective. I'm trying to emphasize S and R. Strength and support and resistance. I'm trying to emphasize support and resistance instead of momentum lately, and wait a bit longer to get into trades. Well, support and resistance has been really important in this market because we've been so sideways and so range bound for a while. Momentum, like I discussed in a meeting some weeks ago, the momentum trades, the real breakout trades, unless the name has been in play, breakouts and breakdowns have been really difficult in this environment because we've been range based. And what does it mean? What does it inherently mean when a market is range based? It means that just when the market's looking best is when it's about to go down, and just when a market is looking worst is when it's about to go up. That's inherently very tricky. So you have to understand your environment. That's not going to last forever. Eventually the range breaks. If it breaks up, breaks down, whatever, all of a sudden momentum trades can work really well again. If the whole market breaks out and starts really moving higher, then momentum trades buying high to sell high will work really well again. If the whole market breaks down, shorting low to cover lower will be able to work out really well again. But this environment that we've been in has been volatile but range based. So the volatility has given good opportunity, but if the extent of your playbook is momentum trades, it's tricky unless you're very focused on things that are in play. And that's unfortunate because I feel like if you're a new trader, and I haven't even finished reading your question yet, I feel like if you're a new trader, like one of the best kind of dummy trades, if you will, that you can learn as you're starting to learn the business is just the breakout trade. It's like a relatively simple, it's about as simple as it gets, right? You just take your daily levels, you find the breakout, you execute the breakout, use the ignition bar low. The trade can work really well in the right market environment, and that's it. And again, it's not to say that they can't work in this environment. You just got to be selective. You really need that news event to create the extra layer of probability that can create the momentum. Because otherwise, every time this market's been looking good for a year now, though maybe we're setting to break up. Every time this market's been looking good for a year now, we eventually break down. And every time the market's been looking to break down, it eventually kind of bounces back up, right? So I totally get why you are trying to kind of expand your thought process here, and instead of just being focused on momentum trade, you're working in support and resistance a little bit more. But with all of that said, let me read the rest of your question. It scares me getting into an extended 5-minute, even though I know it can keep going. Does flattish trading scare you away versus a stock that is moving strong in one way, like XBI? My theory today was XBI and others could correct at any time, but Amazon was in a trading range that had to break one way. So I mean, look, I'm doing a lot of both. I'm implementing both. Obviously, XBI was one of my call-outs in the morning meeting today, but I also, was communicating all of my entries and exits on Roblox today. And I think I bought Roblox at about 40 and sold it about 40, 50. Let me see, 1, 2, 3, 4, like almost 5 times. So just kind of working that range. Or, Roku I mentioned I got out of. Look at this range in Roku. I just keep buying low 60s and selling mid 60s. And I've been doing it over and over and over again, more or less, waiting for this thing to break. And I've just been putting cash in my pocket like so consistently. I mean, even today was just a really nice number into this rally, kind of back into the upper end of the range, and I liquidated the position. And Roku's my 4th best stock of the day, and was able to just put money in my pocket. So I'm doing both. It depends on the market environment. You want to be able to adjust to the market environment that you're involved in. And like I was saying, this environment's been much more about support and resistance until the market itself begins to break. And that's been a big thing that I've looked at also. Another trade that I've been implementing, that I've been communicating, that we've had a few times over the course of the last couple of weeks, is when the Qs have been really weak, but the IWM has been holding in on the small time frames, and we're seeing the Qs, because of money rotation, money rotating like out of mega cap tech and into small caps, mid cap stocks. And whenever that happens, I just when I get 5-minute downside extension in the Qs, and it's later than 10 a.m., 10 a.m., I'm just looking at it. I'm like, if the IWM's holding up, this can't continue. And it's been leading to some good counter trend opportunities to come in on the 5-minute chart to take those trades as well. I'm always more cautious on counter trend stuff though than I am on with trend stuff, and for good reason. Exactly what you just said. An extended stock can always become more extended. So you certainly got to be careful on it. You got to look at your risk. I don't. I like seeing a lot of layers of probability. Like I was still long Roku here at 64. I sold some stock at $64, but I kept some. And I thought about liquidating my entire position and flipping when I saw Rex got short. And Pat confirmed that the 5-minute RSI was at like 90 up here at highs. I'm looking at this 5-minute chart, and I'm the one. I was like, guys, I'm long. This is ridiculous. Like this is ridiculous. Like what this thing is doing for no news, nothing going on, but there's really good volume confirmation. Look at how volume is maximizing on the way up. Is textbook. If you go back to my candlestick class that I do, where I kind of get into that counter trend trade, what I always say is that you want to see volume maximize. Typically ideally on the candle in which the high occurs, but oftentimes it's the candle before. So this is like textbook. Volume is increasing on the way up. It maximizes on the candle before. You get the doji that comes in. Combine that as an extra layer of probability with a 5-minute RSI hitting 90. And you take that counter trend trade. And if all you're looking for is you're shorting, let's say when the candle about closes around $64, with a stop loss at highs at 64.25 and risking, let's just call it 20 cents. All you're really looking for is a move to the 80 MA on the 5. If you can get more than 1-to-1 from that move to the 80 MA on the 5, you're generally looking at a decent counter trend setup. And then if you combine that with the fact that the stock's in this daily range anyway, sure, maybe today is the day in which the breakout on Roku is going to occur. But I think a great general rule for markets is to assume that the status quo stays the status quo until it proves to you that it's no longer the status quo. And right now in Roku and in the market, I've been looking at something that's just been going sideways and sideways and sideways. Assume that it's going to stay sideways until it proves to you that it doesn't. That's your better assumption. If you've been trying to buy $65, $66 in Roku every time it's gotten up there expecting the breakout, you've been enduring so much more pain than if you've been coming in and kind of buying, in the low 60s and then selling into the mid 60s, which is what I've been doing. As kind of just an example. So you take that as a layer of probability. Stock's approaching resistance. It's range bound. It's super extended. Volume's maximizing. I got 20 cents risk here for a move to the 80 MA where I can make $1 on that, let alone if I get a move to target 2 on the counter trend trade is the 21 EMA. I mean, it's just a really, really good trade. And it was a great trade and a great call out by Rex today on that. So I hope that helps Zachary. Scrolling through here, next is from Noah. Regarding the method of placing a stop when the stock price gets close to your target. Hold on, let me reread that. Regarding the method of placing a stop when the stock price is close to your target. Okay, so you're talking about what I call a risk-reward stop. And you stop out if it retraces the distance it was from your target. Is there a certain percentage or dollar amount when the rule comes into play? For example, it would make sense if you miss your target by 5 cents and you end up 10 cents away from your original target, but might not make sense if it's 35 cents away from your target. I understand where this question is going. It may still be working its way up, right? Yeah, for sure. So this one is much more art than science. And I actually did that on Roku today, and I cost myself a small amount of money. I was looking to sell Roku at $62.99. I had an offer on the way up here, and you can't even see it in the chart, but it went to $62.98, and even at that point, and this is before even highs, I was like, man, this is a big move in a short period of time. I really don't want to give this thing all the way back to make an extra penny, so I think I threw a stop in at I don't know, $62.93 or something like that, and the stop triggered. I got $62.91 as a stop, so I didn't make 8 cents or whatever that I would have made if I just left the offer there. I would have gotten filled on the offer, but I wasn't risking giving that all the way back to make an extra penny at that point. It just would have been foolish. But in an ideal world, and this is really how you want to have your trading structured, there should be a rule for every situation, and I think for the most part I do kind of have a rule for every situation. With what you're describing here with the risk-reward stop, it's definitely a little bit more art than science. Is this your first kick? Is this your one-to-one? If it's your one-to-one, for the most part, you can't even do it unless you had a big initial risk. Like if you're risking like a $1 plus, and you end up, your one-to-one ends up, making you 93 cents instead of making you $1, and you get stopped out. Technically, it's going to be a small loser, but it's basically the same thing. But if you were risking 15 cents and you're offered 15 cents on one-to-one, you can't use a risk-reward stop. Or is it a much kind of later kick in your game plan, which is kind of more what this is for me in Roku. This is not like a one-to-one kick that I'm taking in Roku at, almost $63. This is just, profit taking on the way up as the stock is getting extended. If I don't get that fill, I will be giving that piece of Roku for sure back to $60. So do I want to risk $2.98 to make a penny? Absolutely not. So where am I going to, and where am I going to put that risk reward stop in? Am I going to put it in at, 62.89? Am I going to put it in at 62.93? Am I going to, 62.75? Where am I going to do that? Also kind of subjective. What's the spread of the stock look like? How extended is it? How tight can I keep it? Obviously, you want to be able to give yourself the opportunity to get your fill on the offer. That's the whole point of the offer, right? You don't want to if you downtick every single time a stock gets close to an offer and you just hit the bid instead, you end up making a lot less money overall. You will pay more in exchange costs, and you will pay spreads, and you will just make a lot less. So your offer is your offer for a reason. You want to get that filled. But in certain circumstances, like what I'm describing with Roku, you also can't give it back, $3 to make a penny. It just makes absolutely no sense. So unfortunately, with this risk-reward stop thing that I do with my trading, this one isn't necessarily a very hard specific rule of if it gets 2 cents away, then I put my risk-reward stop out 5 cents below where it's trading. It's certainly subjective based on what the game plan was of the trade, how extended it looks like, the price of the stock, the spread of the stock, things like that. So, hope it helps. XLF volume print. And to the end of the day, it just looks like market on close orders. Is it possible to chat after the afternoon meeting? Send me an email and I'll schedule something with you for tomorrow. I'm probably not going to be able to chat with you after today's afternoon meeting. I got to take care of a couple of things, and we're already going a little bit long here, which is fine. But I want to help everybody. But shoot me an email. I'm happy to schedule some time to chat. Yep, sure was. Where's Rex? He's not here for once? I feel like Rex isn't here because he has a question every single afternoon meeting. He's the new Robert, if Robert's listening. I think Sharir's settling his house. I think he's gonna, or no, he's traveling now. I don't remember. He'll be back soon. From Kyle, thank you for the feedback. Super helpful. When you mention this market environment making breakouts harder, does that also include stocks in play? No. So, well, everything's a layer of probability, And I don't. Someone asked me this question recently also. If I rank the layers of probability in terms of most important to least important, and I don't, because I think certain layers of probability can kind of negate others a little bit. Like, the market's always important, but the market's a little bit less important if the stock is in play. So therefore, a market that's not good for breakouts, that becomes a little bit less important if that stock is in play and has news, because that layer of probability kind of trumps it a little bit. But it doesn't mean that the market's not important at all. The market certainly is important. Yeah. Cool, I think I answered your question. Over onto the YouTube here, Mike H asking about USO. So I'm long XLE, not long XLE, I'm long Chevron because I think the XLE got a lot better, and Chevron is one of my preferred stocks in the space because of how massive the buyback is. Obviously, that trade's going to be affected by USO. USO had a really big move in the beginning of April off the Saudi news. It perfectly time corrected at the 80 MA caught up. It tried to give a leg higher here. Got a little bit extended to pull back today. Technically, USO looks great. I don't like trading the commodity. I think the commodity is difficult to trade. It's very gappy. It's very news-based. I really do prefer to trade the individual stocks. But technically here, USO looks really good. You know, big picture, USO's continued success, I think, does depend on what a recession looks like. So, you know, and that's obviously an unknown factor at this point as far as big picture goes. I think USO looks good. From Chi, what are your thoughts on sideways markets, thought process for the next 12 months or longer? And if the Fed keeps tightening rates for longer, can produce this sideways market? Well, we've already been in a sideways market. I was saying that before. We've been in a sideways market for almost a year. Can it continue? Absolutely, it can continue. And as a matter of fact, also going back to something that I said earlier, I think a great rule in trading is assume the status quo will stay the status quo until the market proves otherwise. So we should assume that this range for the market will last indefinitely until a breakout occurs. How will we know that a breakout will occur? Well, we'll see it after it happens. That's always easy, you know, seeing things after the fact. But how do we know ahead of time? We don't. We just got to pay attention to our layers of probability, like I was describing earlier. The higher highs and higher lows in the big picture can work this thing out. So we'll see. We'll see. Obviously, Mike Wilson thinks his market's going to tank, but he's been, after being pretty consistently right in 2022, he's been consistently wrong for the back half of 22 and 23 so far. Did I say there was an opportunity to catch the afternoon squeeze in the market or some particular names? Yeah, there was. The key was the IWM. So the VIX was moving lower, but the key was seeing the IWM break 178 on the intraday. And I think that was a signal that you could have gotten a little bit more aggressive with the market. That's right. Any thoughts on Google? Yeah, I thought that they overpriced that Google news in this morning when it was trading down at 104. I was buying Google at around 104 pre-market. One of the things I said in the morning meeting today was I thought that they were the Microsoft Google news that came out that Samsung is dumping Google as search instead of Bing on as their default for phones. I actually thought that was more positive for Microsoft than it was negative for Google. But the market's always smarter than me, and the market was saying something else. You know, the market was having Microsoft up 2% and Google down 4%, so it was saying the literal opposite. But Google has been really strong. Its technical pullback to the 21 EMA, 104 is an important area. So I like the stock. Earnings is next week, so hard to say what it's going to do after that. But overall, you know, Google's been trading really, really well, and so has Microsoft. Microsoft failed the 290 breakout today, but Microsoft looks fantastic. These things might just need to hit the earnings reports now for us to get further clarity on them. From Jackie, what's my game plan on SSYS? SSYS is an interesting one. I've been involved in SSYS since this day, on the 29th. So I've been trading it pretty consistently. I've been actively trading it every single day that I've been in it, selling the moves higher, buying back the moves lower. There's a lot of drama going on with NNDM trying to buy them out. I usually do not, as a rule, like to be involved in stocks that are getting bought out because I usually don't feel like I have an advantage. I don't have the information advantage. There are funds out there where all they do is they trade buyouts and they, you know, the stock, if ever you look at a stock that's getting bought out, even if you look at like Sumo that I was in most recently that's getting bought out at like $12, I think, or $12.05 or something like that. You know, this was initially, for a while, it was like consistently trading 10 cents below that. That 10 cents below that is the probability that the deal doesn't go through. That's what that represents. And you've got funds out there, again, that have an information advantage over me, that are smart enough to be able to look at the stock and figure out what the probability of the deal failing is, and therefore, at $12, I'll sell the stock because there's a probability that the deal doesn't go through. And my worst case scenario is that I have to buy it back at 12 because that's the deal price. But at 11.90, there's such a high probability of it happening that that's a spot that you buy, as an example. And I don't play that game. But SSYS has been an interesting story because it's trading as if nothing is happening, but the buyout premium on this is massive, and it's nowhere close. And I've done a decent amount of research on what's going on at NNDM, which is actually trying to buy them out. And for the most part, I really don't like these 3D printing companies, by the way. So NNDM put a bid out to try to buy SSYS at $16. I think that's back here. I wasn't involved in the stock. They increased their bid on this day to, I think, $18. And the SSYS board has just been rejecting it, which I think they have a fiduciary responsibility to take it to shareholders. And NDM already owns 14.5% of the stock. After a few days, somewhere in here, the SSYS board rejected the $18 buyout offer, and then NNDM came in and like the next day and said, all right, we're going to increase it to $20.05, but if you reject it at $20.05, we're going to try to do a hostile takeover at $18. So, I mean, and what SSYS, the board keeps saying that the buyout price undervalues the stock's potential. I'm like, you got to be kidding me. It's a buyout price that's trading at like a 30-40% premium over the last 90-day VWAP or whatever, and you're gonna say that it undervalues the stock. That the board's on drugs. If this stock was vastly undervalued at $13, when it's worth significantly more than $20.05, it'd be trading at $20.05 or more. It wouldn't be trading at $13. But there's even further drama because NNDM, their CEO, there's an activist investor in NNDM that's trying to oust the CEO, and the CEO is like partially trying to do this SSYS buyout almost as a way to like thwart the activist investor in NNDM from being able to take his job. And that's like an extra thing that SSYS keeps pointing out to try to say that the bid's not like real. But the bid's real. It's a cash bid. They can't come out of that. So the next thing is that NNDM is going to try to do a hostile takeover of SSYS at $18. And this is a lot of information, but companies can adopt like what they call a poison pill, where they do certain things to kind of dilute the stock. It's actually can be pretty bad for shareholders to make it like impossible for the hostile takeover to actually take place. But the flip side of that is, I guess these are Israeli companies, is that NNDM right away said, and we're going to file with Israeli courts that you cannot do the poison pill option because it's anti-competitive. And they did that this morning, actually. So SSYS, again, they rejected the $20.05 bid from NNDM, and looks like they maybe want to try to adopt a poison pill situation and try to make it so that the hostile takeover can't actually take place. And now NNDM is filing in court to try to prohibit them from the poison pill option. But the way that I would have been looking at it is, I either got a buyout at $20.05, I got a hostile takeover at $18, or I got a board of directors that thinks the stock is worth more than $20. So either way, I've got some interest here in kind of being involved from a trading perspective. And $15 is a big level. So $15 is kind of the spot that I'm paying attention to from a risk management perspective. I really don't want this thing holding below 15. It's ticked below 15, even including this morning on a couple of occasions. The good news is that I've worked my price so well on this thing over the course of the month that I've been in it that I've been able to dramatically lower my average price. So it can enable me now to actually feel comfortable in this thing below $15. Whereas, back when I was trading at the end of March when I first got in it, if it traded below 15, I would have hit out right away. Now I'm not doing that in the same way, and that goes back to just the cash flow trading that I talk about. I've spent a decent amount of time talking about it in afternoon meetings, where like Shopify and Roku are like actually really good examples for me on it, where like I started with a trade in Roku at $50, kind of for this like breakout trade or whatever, and I made so much money in it, and I kind of continued to cash flow in it or whatever, where like, I don't know, I'd have to do the math on it, but like Roku, even though I didn't buy it till 50, my break-even price on it at this point, even if I buy a stock at $63 and I just follow the game plan of rebuying stock as I sold the stock on the way up, even though I started buying it at 50, I think, I'm not 100%, I might be a little bit off with some of my numbers because I got it all in spreadsheets and everything, but I'm just going off memory right now, and there's a lot of stocks in the portfolio. I'll be break-even in it. I won't be break-even. Like, I could hold down the stock. I could hold the stock down to $42 from here to be able to be break-even in it, which is awesome. Like, my ultimate example of that is actually Snap. I could hold Snap down to like $4 and be break-even. I could hold Snap, I think, below the all-time low in the stock before I'm break-even on the trade that I kind of put on in it, if that makes any sense. So the same kind of thing is happening with this SSYS, where initially, hard stop at $15, I've made so much money in it over the course of the month that I've been in it, just kind of cash flowing back and forth and working ranges and buying high and selling low, that I can actually give it a little bit more flexibility in that $15 area as I need to. So that's the game plan. $15 is a really big level for SSYS. I really don't want to see it hold below that. But you got to recognize this is a news event. So anything can happen as far as an update on that news event that could really move the stock in one direction or the other. Yeah, Roku's one you're going to pay attention to. Whew. All right, gang. I'm going to wrap it up. 5:20. Great afternoon meeting. Really good questions for what was otherwise a sideways day. So I appreciate you guys making this a good meeting. You guys made it a good meeting. So I'll see you all tomorrow.